Hi, everybody. Chris Engelbert with Engelbert Financial Advisors in beautiful Allentown, Pennsylvania. And this is the first of the month update for September. Where did summer go? Well, guess what? Kids are back in school. That's what is on everybody's mind right now. So I just wanted to obviously give you an update. This is the first of the month. And again, I'm going to put a pitch in for my app. If you have my app and you downloaded it, the way to get it is by texting Chris E, CHRISE, Chris E for Chris Engelbert. So text Chris E to 36260, and that way you can download my app. This slide deck is already on my app. This video that you're going to obviously seeing now, you can watch it again. It will be on my app as well. So what happened in the month of August? Well, July was obviously a good month. What happened in August is we added another 2%. Everybody is looking at lower interest rates in the future, and that's bleeding over to a more positive sentiment in the stock market. Well, last week we got the first of the month employment numbers, and it shows that employment is softening in the United States. We have a Fed rate cut potentially coming up in another week. Everybody's baking in at least a 0.25% rate cut. We think it actually could be as much as a 50%, I should say 50 basis points or a 0.5% rate cut. However, you got to be careful what you wish for. And we've said this before, where you have a stock market grinding higher in the face of a potential economic slowdown. So September and October have been historically challenging for stocks. We see no different this year. The good news, though, is that the Russell 2000 has finally joined the party. Now, we're not a big fan of the Russell 2000 index in itself because a lot of the stocks in the Russell 2000 don't make money or are losing money. But if the point is, everybody looks at the Russell 2000 because it represents small mid-cap stocks. We use various small mid-cap ETFs, and those joined the party, and obviously the Russell 2000 did as well. But one of the things that we've been saying literally for the last 2 to 3 years is that we need to get small mid-cap stocks to really start to accelerate, and the value differential between the Mag 7, you've heard me talk about the Magnificent Seven, obviously Apple, Amazon, Netflix, Meta, Microsoft, Tesla, Google, the valuations between that narrow cast of large cap technology stocks and small mid cap stocks has historically never been bigger. And one of our theses is that investors are looking around for what's cheap and what's expensive. And if we do get interest rates coming down, one of the big beneficiaries are smaller companies, because if they go out to borrow money and they can borrow money cheaper, 1% or 2% cheaper, that goes right to the bottom line. So I can make the case that you could see a lot of the large cap tech stocks start to trade sideways, while the small mid cap stocks pick up the slack and really do well over the next year, possibly even 2 years. So it was encouraging that the Russell 2000 has joined the party. We favor small mid cap stocks right now and dividend stocks, and it's nice to see things happening there. Now, let's talk about interest rates. So one of the things that we have right now is an extremely flat yield curve where short rates are about where long rates are. So you can still get short-term bank CDs, 3 months, 6 months, right around 4% as of this video. The 10-year Treasury is right at about a 405, 407 right now. When the Fed starts cutting interest rates, you're going to see those short-term CD rates, money market rates come down. We think that by next year, they could come down as low as 2.5%. Now, what that means, that doesn't necessarily mean long rates are going to come down, although it puts pressure on the 10-year Treasury to come down. But one of the other things that's happening is as long rates begin to ease, mortgage rates begin to ease. So right now, 30-year mortgage rates are around 6.5%. We think if long-term mortgage rates get closer to 6%, you'll see the housing arena start to cook off again. But just because short-term interest rates are looking to slide lower doesn't mean long-term interest rates are. But one of the things that we've been doing is lengthening duration, which is a fancy way of buying longer term bonds. So if you haven't lengthened any duration in your fixed income portfolio and you're still crowded in short-term bank CDs, you have to start looking at alternatives, because obviously you could wake up next year and get 2.5%, 3% on a short-term bank CD. So will the Fed cut, not cut? We think this last employment number gives them some ammunition as to why they need to start easing to avoid a potential slowdown in the U.S. economy in 2026. So let's sum it up. Month of August saw another 2% gain in the S&P 500 and some of the other indices out there. We saw small mid-cap stocks start to perk up. And in fact, they've been a very good place to be ever since the low back in April, if you can remember back that far. But the big question is, what's the Fed going to do on interest rates? Right now, the interest rates, Fed fund futures, say that fast 3 times, are predicting about a 95 to 98% of at least a quarter point cut in interest rates in 2 weeks. But there's also about a 70% chance that it may be as much as a 0.5%. Now, again, initially a stock market may do well when the Fed cuts interest rates, but sometimes investors take a look at why is the Fed cutting interest rates? And if the Fed is cutting interest rates because of a potential future slowdown in the economy, stocks could experience some volatility in the month of September and October. So we have a lot of cash on the sidelines. Actually, it's in short-term fixed income that we're looking to be selective in the months of September and October to take advantage for a possible year-end acceleration in the indices for the stock market if we get some better encouraging news as far as the U.S. economy goes in the month of October, November, December. Again, if you ever want to discuss your portfolio, if you're a client of ours, obviously you can reach us at any time. We love to talk to our clients. We are not the type of advisor that shies away from having conversations with clients about their portfolio. Again, if you download my app, you can actually set up an appointment on my app. So download my app by texting Chris E to 36260, and you could actually set up an appointment. We can do in-person, phone call, or Zoom. So that's the first of the month update for September. We'll be back next month. We'll talk to you soon.